Subscribe to my channel Report Stock.
Welcome back to the Deep Dive. Today we're really digging into Chinese tech giant Alibaba Group, BAMA. They've made some serious waves in the market recently.
Yeah, definitely. And for you listening, this isn't just a stock ticker story. Looking at Alibaba now, it's like a window into, well, everything. The global AI race, intense e-commerce battles.
And how these huge companies pivot strategically in, let's face it, a pretty complex economic scene.
Exactly.
So our mission today, unpack their latest Q1 results, look at this really interesting AI chip news, and figure out their moves in cloud and e-commerce.
The goal is to get the what and the why behind what they're doing and, what it might mean for their future.
Okay, let's jump right in. Alibaba stock boom vaults 12.9% in one day. Gaps up. That doesn't just happen. What triggered that big jump? What's the real story there?
Well, you had two big things hit almost at once, which really fueled that market reaction. First, their fiscal Q1 earnings came in better than expected.
Always help.
Always helps. But then you also had this separate, pretty significant report about their AI chip development work.
Ah, okay. So two distinct things.
Distinct, yeah, but kind of connected when you look closer. And together, they created a really powerful market signal.
Right. So the headlines look good on the earnings front, but digging in, was it all positive or was the picture a bit more nuanced?
Definitely more nuanced. You have to look past the initial cheer. So for the quarter ending in June, they earned an adjusted 14.75 yuan per ADS,
Okay.
which, yes, beat the analyst forecasts. FactSet had them at 14.16 yuan.
But there's always a but.
There's always a but. That figure was actually down 10% from the year before.
Oh, interesting. And sales?
Sales climbed, but only modestly, up 2% to about 247.6 billion yuan. That's roughly $34.6 billion.
Which sounds big,
But it actually missed analyst estimates. They were expecting closer to 251.4 billion yuan or $35.15 billion.
So beat on adjusted EPS, down year over year on that same metric, and a miss on overall revenue. That's quite a mix.
It is. It tells you they're likely managing costs tightly in some areas, maybe seeing margin pressure, but perhaps not getting the broad top-line growth investors hope for everywhere.
And that year-over-year earnings drop points to those investments we talked about.
Exactly. Big spending often hits the bottom line first. You see that trade-off happening.
Okay, but within that mixed bag, you mentioned a bright spot, the Cloud Intelligence Group.
Yeah, that really stood out. Cloud intelligence revenue jumped 26%. That's strong on its own. But what's really key is that it accelerated. It was 18% growth the quarter before, so 18 up to 26%.
Wow. And what's driving that acceleration?
Well, the company pointed directly to increasing adoption of AI-related products. So it's AI demand fueling that cloud growth.
Okay, now it's connecting. This isn't just cloud growth. It's AI-driven cloud growth.
Precisely. Which leads us right into that other catalyst.
The AI chip report. This feels like a really strategic move, maybe even a necessary one for them, taking matters into their own hands.
I think that's a good way to put it. The Wall Street Journal reported, citing unnamed sources, mind you, that Alibaba is testing a new custom chip.
Custom designed for AI.
Exactly. For a broad range of AI tasks. This isn't just tweaking existing hardware, it's a ground-up, in-house effort, it seems.
And you have to see this against the backdrop of, well, geopolitics, right? The U.S. restrictions.
Absolutely critical context. This is happening while the U.S. has curbs on advanced NVIDIA AI chips going into China.
Right, though NVIDIA got approval for an older chip.
They did, but then there are reports that Chinese authorities are actually pushing domestic firms not to buy even those older chips, sort of encouraging local solutions.
So Alibaba developing its own chip. It sidesteps that whole issue, or at least tries to.
It potentially addresses a huge hurdle, yeah.
Right.
It shows how companies are adapting to these supply chain and, frankly, political challenges by trying to build their own capabilities. It's about resilience.
And this isn't just a side project, is it? It fits into a bigger AI strategy.
Oh, completely. It's part of a massive push. Remember, Alibaba's China's biggest cloud provider. They've been heavily investing in their own AI models, the Qwen LLMs,
Right.
integrating AI into their retail side too. And they've committed huge money, over $50 billion over the next 3 years, specifically for AI infrastructure in their cloud business.
$50 billion. That's serious commitment.
It is. And their CEO, Eddie Wu, basically confirmed it. He said, driven by robust AI demand, Cloud Intelligence Group experienced accelerated revenue growth, and that AI product revenue is now a, quote, significant portion of revenue from external cloud customers.
So AI is clearly core to their future strategy.
Yeah.
But they're also fighting battles on other fronts, right?
Yeah.
This quick commerce market in China sounds
It's
intense.
fierce, absolutely fierce. You've got Alibaba, Meituan, JD.com all locked in these pretty aggressive price wars.
For app-based delivery, like groceries, essentials delivered fast.
Exactly. Quick commerce, it's a huge, fast-growing market, and everyone wants dominance. Investors are watching this space very closely. It's a land grab, essentially.
And land grabs are usually expensive. What's this battle doing to Alibaba's profitability?
It's definitely costing them. Their adjusted EBITDA, that's earnings before interest, taxes, depreciation, amortization, it fell 14% year over year, down to about $5.4 billion.
Ouch.
Yeah. And the company explicitly mentioned the investment in Taobao Instant Commerce, that's their quick delivery arm they launched recently, as a reason for the decline.
So they're consciously spending to gain share there.
Seems like it. Even their competitor Meituan complained about, quote, irrational competition in food delivery. Gives you a sense of how heated it is.
Okay, so heavy investment there. How are the other e-commerce bits doing? Are they holding up?
Actually, yeah, there are some definite bright spots offsetting that pressure. Their main China e-commerce group revenue was up 10%, which is solid.
Okay.
And their international e-commerce, that was up a pretty impressive 19% to nearly $5 billion. That shows their global strategy is gaining traction.
Right, so not all segments are feeling the same pressure. Good international growth. Okay, let's tie it all together. We've got mixed earnings, but strong cloud growth driven by AI.
A major AI chip initiative, this costly quick commerce fight.
But also solid performance in other e-commerce areas, especially internationally.
Yeah.
How did the market digest all of this? You mentioned the big stock jump.
Right. That 12.9% jump on Friday pushed the stock to $135. It gapped up over what some analysts saw as an early entry point around $128. Technically, it looks like it's forming a consolidation pattern now, maybe building a base, with a traditional buy point higher up at $148.43.
And how's it done overall this year?
It's up a lot, 60% this year, which sounds amazing, but it was actually higher earlier, kind of stalled around March.
Why then?
Lingering questions about the Chinese economy overall, and those U.S. restrictions on AI chips definitely weighed on it. So Friday was a strong bounce back from that period.
Got it. And what are the analysts saying? Are they buying into this pivot towards AI and quick commerce despite the short-term costs?
Generally, yes, but with caution. They see the long game. CFRA analyst Angela Zeno noted these moves are driving meaningful operational changes.
Meaningful but costly.
For now, yes. He acknowledged they weigh on short-term profits, but thinks they position Alibaba well long-term. He specifically said that cloud growth validates Alibaba's AI infrastructure emphasis and puts them in a good spot for Gen AI.
That makes sense. Did he comment on the international side too? That 19% growth?
He did, yeah. Praised it. Called the 19% growth and their progress towards breaking even effective international execution. So that part of the strategy is getting good marks.
Okay. So overall market view. How does Alibaba stack up against its peers right now?
Well, its IBD composite rating is 88 out of 99. That's pretty strong, shows good overall metrics.
And the industry group? Retail internet.
That group is doing well, ranked 10th out of 197 groups, up 25% this year. So it's a strong sector.
But where does Alibaba sit within that strong group?
It's ranked 13th. So solid, but behind leaders like CLTD, the Singapore-based company. It just highlights, again, strong company, strong sector, but really intense competition.
Okay, so wrapping this deep dive up, Alibaba is clearly not standing still. It's actively reshaping itself, right?
Yeah.
Pouring money into AI, fighting these e-commerce battles, all while dealing with tricky geopolitics.
Exactly. This is a company making very deliberate, very calculated long-term bets, especially on AI. And they're willing to accept lower profits right now to secure that future growth.
That classic tension between today's results and tomorrow's position.
Precisely. It's about building for the next wave, building resilience in a world that's changing incredibly fast. And maybe that leaves you, our listener, with something to think about. In this era of rapid tech shifts and global uncertainty, how much short-term pain should companies and maybe investors tolerate for that promise of long-term strategic advantage, particularly in something as fundamental as AI?
Yeah, and what does Alibaba's specific journey, juggling innovation, competition, global pressures, really tell us about where tech innovation is heading, especially within this complex global economy? Something to chew on.
Subscribe to my channel Report Stock.